Most new investors lose deals not because of price, not because of financing, but because they don't understand two simple requirements: EMD and proof of funds. Sellers take you seriously only when they know you can perform. And nothing communicates seriousness faster than submitting your earnest money deposit and showing real proof of funds. Stay with me, because by the end of this video, you'll understand exactly what EMD is, how proof of funds works, what sellers expect, and how to use both to win more deals. Let's start with EMD, earnest money deposit. What is EMD? EMD is the money you put down when you go under contract to show the seller you're committed. Typical amounts: minus $1,000 for small deals, 1% of purchase price for standard deals, higher EMD for competitive markets. The purpose of EMD is simple. It shows you're serious. And here's what most buyers get wrong. They think EMD is extra money. It's not. It applies toward your down payment and closing costs. Why EMD matters to sellers. Sellers want a buyer who won't back out, a buyer with real funds, a buyer who respects timelines. A strong EMD signals certainty, and certainty wins deals. A 2024 NAR report found that buyers with higher EMD amounts were 34% more likely to have their offers accepted, even when they didn't have the highest price. Now let's talk about proof of funds, POF. What is proof of funds? POF is documentation showing you have the money to close. It typically includes bank statement, screenshot of available funds, name plus balance visible, line of credit verification, funding commitment letter from a lender. Sellers expect POF before taking a property off the market. The number one mistake investors make: they send incomplete proof of funds. Things that do not count as POF: statements with names blacked out, outdated statements, pre-approvals for loan programs, letters without dollar amounts. Sellers want to see the funds. What sellers look for in POF: sellers check that the balance is high enough, the account belongs to you or your LLC, the funds are liquid, the document is recent, last 30 days. Strong POF builds trust immediately. How EMD and POF work together: think of it like this. POF proves you can close. EMD proves you will close. When you submit both early, you project confidence, and sellers treat you like a priority buyer. Pro tips for investors. Tip 1. Have PDFs ready before you make offers. You should always have clean POF ready to send. Tip 2. Send EMD immediately after going under contract. Delays make sellers nervous. Tip 3. Use a lender-provided POF letter if your cash is limited. Private lenders often provide proof of funding. Tip 4. Communicate clearly. Tell the seller, POF attached. EMD will be delivered within 24 hours. Tip 5. Never overstate your funds. Sellers verify the payoff. Understanding EMD and POF is how you get offers accepted, gain seller confidence, compete in tight markets, avoid contract cancellations, move through financing smoothly. EMD shows commitment. POF shows capability. Together, they make you look like a serious investor. Educational content only, not financial advice.